A chain of conspiracy is surfacing, the bill is paving the way, but MVRV hasn't surged, and Grayscale's GBTC is also weak. Where exactly is Bitcoin headed? Standard Chartered is calling 2026 the year of Ethereum. How high can it go? Take a guess. Dubai regulators are trying to pass the buck. Will privacy coins really be doomed? It's Tuesday, January 13th, and this is the BitcoinTV Chinese channel, Billion Hezai. I'm Michael. Let me emphasize once again for new viewers, on this channel, we sort through all the major and minor news in Web3 every day. Whether it's big news from small projects or small news from big projects, we'll keep you updated. In these 3 to 5 minutes of headlines, we bring together all the key data and news in Web3 that you should be paying attention to. We serve up everything in one scoop, but we don't control the lever. Today's data headline, the Clarity Act is set to face a hurdle in the US Senate Banking Committee next week. However, the market doesn't see it as a major risk. Why? Because the on-chain data is very transparent. There hasn't been a large amount of coins moving to exchanges in preparation for selling, so the net flow remains in a neutral to slightly outflow state. At the very least, this shows that people aren't in a rush to cash out and run. Let's look at the profit from spent output, the SOPR, which has been hovering around 1 for a while now. This indicates that not many people are choosing to take profits and sell their tokens at this moment. Even more crucial is the on-chain transfer activity. Few transfers are occurring now. Most Bitcoin remains in original addresses. This data shows the market hasn't entered defense mode or reduced positions. At most, people are holding and trading less. Everyone is waiting for regulatory clarity before acting. So from a long-term perspective, what really matters isn't whether there's a short-term price increase, but whether the US will ultimately define Bitcoin's status as a digital commodity. This requires legislation to set the direction, so the blockchain is actually already pricing in the related positive news. Since the price hasn't chosen a direction, people are more inclined to hold rather than trade frequently. This indicates that the market is gradually shifting from a fast-in, fast-out speculative model to an institution-led long-term holding rhythm. Let's look at another metric, the ratio of market value to realized value, or MVRV, which is currently around 1.6. You should know that historically this is neither a particularly high nor low position. In previous bull markets, during the mid to late stages and at the peak, the MVRV reached as high as 3.55. Now at 1.6, the difference is huge. So looking back, whenever the market really started to accelerate and surge, the MVRV index would shoot up like a rocket, quickly soaring upward. At that point, it would enter the high red zone, which basically signaled that the market had peaked because every coin people held was making money. Market capitalization would skyrocket and the sentiment would also go through the roof. But this time, it's different. There have been several attempts to break upward, but every time it reaches the midline high, it gets pushed back down. So this definitely doesn't mean that a surge is about to start, but it also doesn't mean we're about to hit rock bottom. If anything, the mindset for a bull market now is more like slowly digesting valuations, grinding through time and difficulties. So at this current level, at most, the market is just moving sideways. It's just that the adjustment period is being extended. You have to understand, the real end of a bull market is when M1V surges to a high level and stays there for a long time and then starts to turn downward. At that point, we can at least determine that a bear market is about to begin. But right now, we haven't even seen a trace of these signals at these levels. Let's take another look at Grayscale's GBTC, its ETF. It holds about 1.33 million Bitcoins, and if we look at it recently, there hasn't been any continuous outflow. This shows that the selling pressure is decreasing, but the demand side just isn't strong enough. In several rounds of Bitcoin rebound rallies, the price of GBTC couldn't keep up with spot Bitcoin. So it's clear that people simply aren't interested in indirectly holding Bitcoin by buying funds like this. And when its trading volume surges, it's basically during times when the market is swinging wildly with high volatility. That's hardly new money coming in. It's clearly just seasoned players using various forms of leverage to rebalance their portfolios, swap assets, and shuffle around existing holdings. So what's even more important is that GBTC has been trading at a discount for a long time now, whereas in the past 2 years, it was always at a premium. It's completely flipped. A negative premium basically means that no one is actively willing to take over this fund. Based on past experience, this kind of discount usually happens when people don't dare to buy aggressively, and when risk appetite drops, a discount appears. So this is not a signal that a massive rally is about to start. The situation with GBTC just goes to show that the market really isn't that aggressive. Everyone is being pretty cautious. It's still a long way off if you want to use it to judge the market trend. When everyone is being cautious, the market is especially prone to a double bottom or even a deeper dip. Alright, please give a like and turn on the notification bell. Now let's check out the most profitable news in Web3. Everyone says you cannot make money beyond your level of understanding, but where does that understanding come from? For those of you who are new here, if you watch our daily report for just 10 minutes a day, for a week or a month, see if your understanding of Web3 has improved. Will your sense of security and your overall intuitive grasp of the crypto space become deeper? So where does understanding come from? It starts with every small change in finance, policy, and sentiment. For today's headline news, let's focus on Ethereum. First, everyone, please write in the comments what percentage of your portfolio is in Ethereum. Let's see how much Ethereum makes up in your total holdings. For me, it's about 35%. Years ago, when Ethereum dropped to 1,000, it was heavily criticized. People said Ethereum lost its narrative to competitors, but things changed. In 2 years, 2 listed firms pushed Ethereum from 1,000 to over 4,000. Even if Bitcoin drops back to the 8,000 range, Ethereum is still hovering around 3,000. Although Ethereum has many competitors like Solana, Base, and a bunch of others, they can only take away some of Ethereum's functions. Ethereum is like a heating company, a water utility, or a power company. You might not realize you're using it, but in reality, everything is running on Ethereum. Nowadays, stablecoin settlements and RWA, real-world assets, on-chain transactions, all ultimately rely on Ethereum's value. Remember last year, in 2025, institutions and Tom Lee gave Ethereum high targets, forecasting a year-end price of $8,000. Those predictions have all failed, so in 2026, Standard Chartered Bank promptly adjusted its valuation.
Standard Chartered lowered its short-term outlook for Ethereum but raised longer-term targets, $7,500 by late 2026, $15,000 in 2027, and $40,000 by 2030. They view Ethereum as financial infrastructure, not a cyclical asset.
The outlook for crypto is still really good for the next 5 to 10 years. I don't want to overuse the term super cycle, but we know that Wall Street wants to tokenize everything, whether that's Vlad at Robinhood or Larry Fink at BlackRock, and that's going to bring a lot of efficiencies to Wall Street, but it really brings the use case forward for something like Ethereum.
By 2028, stablecoins and tokenized real-world assets may reach $2 trillion, with over half on Ethereum. As value returns to the application layer, the ETH to BTC ratio should reconverge, the 0.08 range in 2021.
The reason Standard Chartered's research report stands out is that they hired a TimeWeb 3 executive who has a deep understanding of the crypto space. I really want to meet this person. I heard he's in Hong Kong, so next time there's a consensus conference, I'll try to invite him to the live stream to have a face-to-face chat with everyone. As for Standard Chartered, when it comes to their valuation of Ethereum, they're not just waiting for Ethereum to suddenly surge. If you read their research report, you'll realize that what they're betting on, or rather what they're wagering on, is something that's painfully slow, admittedly boring, but the more you bet on it, the more stable it becomes. Money, or rather, the underlying financial settlement layer in the blockchain, will inevitably be moved onto the chain bit by bit, and Ethereum is the only real choice. We've talked about this in many live streams. Ethereum won't be surpassed. At most, in certain niche areas, like faster settlement, Solana might take the lead. Or maybe some other alternative chains like Optimism, for example. These public chains might capture a specific niche or function, taking some of Ethereum's market share in those areas. But as the foundational infrastructure and the king of this system, Ethereum's position hasn't faced any real challenges so far. Any claims about surpassing it are just marketing slogans, so don't take them too seriously. Now, with the new valuation out, Ethereum 2.0 is expected to reach $7,500 this year. Do you think that's possible? Share your Ethereum holding ratio and the price you think Ethereum will reach at its peak this year in the comments section. Let's be honest here. No emotions, no jokes. Seriously, take a look. Among our followers, there are actually a lot of hidden talents. What are everyone's expectations for Ethereum's performance? Binance has moved from Dubai to the UAE, and this was a major announcement made at this year's Binance Blockchain Week, right? Actually, if we lay out the timeline of these news events, you can interpret a lot of meaning from them. First, on October 11th, there was an unexpected flash crash, and the entire crypto market's liquidity was wiped out. $40 billion vanished overnight. Then Binance moved from Dubai to the UAE, obtained global compliance licenses, and split up its various business divisions, all for the sake of compliance. If you follow this thread, do you get any particular sense or atmosphere from it? Does anything stand out to you? Why is the UAE an exchange paradise? Its regulations are exceptionally relaxed, focusing only on anti-money laundering and counter-terrorism financing past these, and you can list any coins and operate freely. Maybe it was inevitable that moving from Dubai to the UAE was triggered by something. Recently, Dubai made a big move. Previously, the management of exchanges in Dubai was handled by the Dubai Financial Services Authority, a government agency. Now, the authority to review which coins can be listed has been transferred to the DIFC, the International Financial Center. To put it plainly, from now on, if you want to list a coin on a Dubai exchange, you need to weigh the risks yourself and handle compliance on your own first.
Starting from January 12th, the DFSA officially implemented new regulations for crypto token oversight and stopped maintaining the existing list of approved tokens. This change stems from a public consultation launched in October 2025, and it also means that since the relevant regulations were put in place in 2022, there has been a directional shift in regulatory logic. Charlotte Robbins, General Manager of Policy and Legal Affairs at the DFSA, pointed out that the new regulations are taking a more flexible and principles-based approach, supporting innovation while seriously listening to the market, but with very clear prerequisites. Now, licensed crypto firms in the DIFC must self-assess token compliance. This requires documented evidence and clear reasoning that withstands scrutiny.
Inside the Dubai Multi-Commodities Center Free Zone. This is one of many free zones established in the Emirates. Free zones are geographic areas, usually with a specific industry focus, designed to attract foreign businesses.
Dubai has consistently relaxed its regulations on cryptocurrencies, and I think that's the right move. Among all the Emirates in the UAE, Dubai isn't the wealthiest. It doesn't have oil, it only has tourism, so its financial sector must be open. This is a necessary strategy for Dubai to attract more capital. It's different from Singapore. Singapore is already flush with old money and is making a fortune just from that, right? Right now, there are so many wealthy people from all over the world bringing real money, hoping to get permanent residency in Singapore. You can see that all the old money from Hong Kong and even money from some mysterious countries is flowing into Singapore, right? Singapore is already at the point where they're saying, please don't come anymore. Your Web3 market cap of a mere 2 trillion isn't even enough to get stuck in my teeth, so don't come here and stir things up. But Dubai is different. Dubai only has financial openness, but it has a geographical advantage. It's close to both Europe and Asia, with similar time differences to both, and it's just a 4 or 5 hour flight to anywhere. So if Dubai becomes even more open in finance and in Web3, then in the future, Dubai will be a major trendsetter in cryptocurrency. It should have no competitors. At least when I went to Dubai 10 years ago, it felt like it was full of scammers. Blonde hair, blue eyes, speaking with a British accent, and talking about business deals worth billions right off the bat. But now there are exchanges, builders, and ecosystem programmers, coders, and communities. So Dubai's crypto ecosystem is becoming more and more friendly. And if the policies keep getting more relaxed, Dubai has a lot of potential. On one hand, he's helping people through tough times, but on the other, he's crossing regulatory red lines. How will USDT's double life end? After 9 years, the ban has finally been lifted. Korean companies can now invest in cryptocurrencies. Does this mean the bull market is about to start? All right, following Venezuela, now Iran is also taking action. Iranians have started taking to the streets to protest the devaluation of their fiat currency. Of course, there are other political demands as well, but that's not our focus here. Right now, Iran's fiat currency is experiencing severe devaluation. Everyone is using crypto wallets for daily payments to protect their assets, so USDT has already become the de facto fiat currency among ordinary people in Iran. A friend of mine who works at a certain game company told me that when they were settling business with Iranian partners, the other side directly asked if they could settle in USDT.
There are multiple reports that the government itself has been trying to evade sanctions by selling oil in Tether, which they then convert into Bitcoin, and so much of this market is driven by sentiment.
The Iranian rial fell to a historic low against the US dollar, sparking nationwide protests. The government even cut off internet access in some regions. Under the pressure of high inflation, USDT based on Tron became the most commonly used crypto asset locally, used as a hedge against inflation. Later, fearing capital outflows, in September 2025, restrictions were imposed, capping holdings at $10,000 in crypto with purchases at $5,000. Since 2023, Iran's Revolutionary Guard transferred over $1 billion in stablecoins via 2 UK companies, led by Babak Zanjani, a longtime sanctions evader.
All right, so this actually brings up a problem. In the eyes of ordinary people, stablecoins are a life-saving achievement, a tool for preserving value. But in the eyes of the government, or at least these centralized institutions, they see it as a loophole for evading regulation. So if you look at the period from the end of 2023 to 2025, Tether has already frozen about $3.3 billion in suspicious funds. Of that, $1.75 billion was USDT on the Tron blockchain that was frozen. So their method of freezing is actually quite sophisticated. They don't freeze entire countries or regions, they only freeze specific suspicious wallets. So I want to remind everyone, once again, if you think there are risks with your wallet, or you don't know where the funds in it came from, you absolutely need to learn how to use a mixer. It's not about trying to evade regulation, but about protecting the safety of your own assets, especially when you're transferring money into a centralized exchange. Using a mixer is a basic skill that everyone in the crypto space should master. As for how to use a mixer, our channel has covered 4 different mixers, including usage guides and recommendations. You can simply search for best mixers on our channel to find the tutorials. In the crypto world, the term Korean kimchi premium is something everyone is familiar with. But what many people might not know is that Korea's crypto scene is quite unique. It's extremely popular among the general public. However, there's a piece of news that might surprise you. Korean companies are legally prohibited from engaging in cryptocurrency trading. Crypto has always been labeled as high risk for them, which is understandable since the government is concerned about companies creating systemic risks. So, since 2017, crypto trading has been so popular among the public that there are more people trading coins than stocks. But for companies, not a single cent could enter the crypto world. This creates a particularly stark contrast, right? Well, now, Korea's policy on companies getting involved in cryptocurrency is starting to loosen up.
South Korea's FSC drafted guidelines for corporate crypto trading, potentially announced by February. If approved, listed firms and professional investors can finally allocate crypto assets, ending the ban since 2017. However, the degree of openness is quite restrained. Companies are only allowed to allocate up to 5% of their own capital per year, and investments are limited to the top 20 cryptocurrencies by market capitalization. Funds are expected to focus on Bitcoin and Ethereum. Additionally, batch trading and price limits are required to minimize market impact.
All right, Korean companies can now invest in crypto assets, but don't think this means a bull market is coming and it's time to hit the gas. They can only invest up to a 5% cap. Plus, how many executives at Korean companies actually understand the crypto space and are willing to take the plunge? That's still a big question mark. Of course, Korea has always been in a rather closed state within the crypto world. Listing on Coinbase, Binance, and a Korean exchange is basically the standard triple combo for almost every project, right? And of course, Korea holds its own value in the overall Asian crypto market. Especially when the Korean kimchi premium turns positive again, that's a sign the bull market isn't far off. All right, let's check out the news update.
To put it simply, what Musk has done is directly embed the market charts into X's timeline. Smart Cash Tax went live this February, so now, while scrolling through your feed, you can conveniently check crypto prices and stock prices, backed by roughly 700 million users. With all this buzz, many people feel that the impact on the crypto market could be just as significant as when Bitcoin ETFs or PayPal entered the scene back in the day. Maduro has already been taken away by the US, and the market immediately went wild, with rumors spreading that Venezuela is actually hiding 600,000 Bitcoins. That's worth about $60 billion, but no one dares to confirm whether it's true or not. When SEC Chairman Paul Atkins responded, he was also very cautious, shifting the decision to the executive branch. He neither acknowledged it nor completely ruled out the possibility. Trump said as AI grows, it consumes more electricity, and tech giants should pay the bill. He told Microsoft to act this week. The reality is simple. Computing power and data center energy use are surging. The US power grid has already been pushed to its limits. As for silver, this rally really can't be stopped. It's been climbing steadily since 2025, and just early this morning it surged again, breaking past $85 with a single-day increase of over 7%. setting yet another all-time high. The market is even more intense than most people expected. According to CNBC, Apple has directly teamed up with Google. They immediately chose Gemini as their main AI, and from now on, they'll be working together long-term, integrating this more conversational and more capable generative AI into Siri and the entire line of Apple products. This move also signals to the outside world that Apple is no longer just watching from the sidelines, they're officially entering the AI race.
So where does good insight come from? It comes from our daily news brief. In just over 10 minutes each day, we do our best to avoid empty talk, but we always tell the truth and speak plainly. Today at the altar, let's take a look at how to achieve your own results in the crypto world. Because in the investment market, especially in crypto, no one is going to reason with you, right? Here, it's all about success rates. So even if you made money today, it doesn't really belong to you. It might just be temporarily sitting in your account. Don't think the market is simple just because you made some money when you first got in. Don't let yourself get fooled and overestimate your own abilities. In reality, there's a lot of randomness in the market. Profits you don't truly understand will eventually be paid back with interest. When the market is good, you make money no matter what you buy. That's not skill. That's the environment. That's the trend. When does your understanding really get tested? It's when the market shifts or volatility reverses, can you still survive? Do you still have your principle? Remember, the money you make by luck is usually lost by strength. The market's favorite thing to do is to give you the most expensive lesson when you're feeling confident. So in the long run, there are only two types of people who can succeed in the crypto world: those who understand risk and those who can endure the cycles. Short-term excitement and volatility depend on luck, but long-term results come down to your understanding. The market will never reward those who are simply diligent, nor will it sympathize with those who work hard. It only rewards those who make the right judgments and those who last. If you understand this, give us a like. Here you'll find all our membership benefits. We hope you'll join as a member, hustle with us, gradually become wealthier together, and become part of the Wealth Enthusiast Club. See you tomorrow.